distance, which helps us traverse those areas that we still can't see. You know, with all the information that these things are giving us, we still can't see the environment. So with a little bit of help of traversal, combined with all these other things together, you know, it's a subset of features that you add to a game to make it accessible.
This is blowing my mind. It's so fascinating. Tell me a little bit about the size of the gaming audience that needs some kind of accommodation or accessibility feature.
The size is large. It's larger than anyone thinks. That's the thing. Disability, the people with disabilities in the world is a number that is constantly growing. Millions of people already have disabilities, actual millions. And that's not small in the gaming market. That's not a small number. Developers, the developers that aren't interested in accessibility might tell you that there's not a big enough market, but I promise you there is. And the thing is, if you make a game accessible, you're also future-proofing it.
Yes.
Because more people are becoming disabled all the time. Old age tends to add disabilities to people. Even whether they're visible or invisible disabilities, maybe you can't see as well as you used to.
That's a really good point. I mean, all these Gen Xers who are going to get into their 60s and 70s, they're going to want to continue playing video games. Talk a little bit about the future here with the metaverse, with VR, with AR. What are the opportunities that arise because of that?
It's even that. Actually, it's more than you might think. There's tremendous potential, even for the totally blind with VR. I actually wrote an article about this a long time ago. And I had a VR experience where I successfully played a virtual reality shooting game simply because the 3D audio in the game, the 3D sound effects used in the virtual reality were so good that I could actually locate my targets with sound alone.
Oh, interesting.
And I was able to successfully play the game. It's tremendous. VR actually has potential.
Interesting interview, really important topic there. Brandon Cole, of course, a games consultant, speaking with Bloomberg's Scarlett Fu about how to make these games a lot more accessible. This has been a big issue. He's worked on a lot of games there, whether it's, nat sound effects, the menu narration, a huge issue, not only for those who are blind, but even for other folks who have other capacity issues there. Looking at the S&P 500, down about 0.2% as we get ready to count you down to the close. Final hour of trading. Romaine Bostick, Taylor Riggs, and Caroline Hyde.
Something wrong with her eye. And when I had a look, it looked like she was blind. The vet that she's registered with were only doing telephone appointments, which was a bit pointless because she really needed to be seen by someone. And I couldn't get one anyway for like another week. I was just quite worried about, the complications of leaving it for so long.
We've seen millions more animals becoming pets in the past year due to the people having increased time at home. What we're also finding is due to Brexit that we're having decreased numbers of European vets working over here. So unfortunately, we're unable to meet that current demand for pet services. Also, COVID's got the inevitable impact with people having to self-isolate.
It is very limited what we can diagnose, so it's more about peace of mind and determining whether they do need to be seen in person.
hope is that these actions will cease because there is always the possibility of miscalculation, of miscommunication, and that's dangerous.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm Mark Crumpton with Bloomberg's First Word News. Chinese builders are scrambling for ways to avoid default on imminent bond obligations amid continuing fallout from Evergrande China Group. The National Post says Chinese developer Sinic Holdings announced it would likely default on bonds worth $250 million. And some holders of Evergrande U.S. dollar bonds that have coupon payments due today said they had yet to receive them. Meanwhile, other Chinese developers want to extend payback dates on debt or offer new. Dow Jones says China's President Xi is now targeting ties between Chinese financial institutions and private firms. Disruptions at Southwest Airlines have moved into a fourth day. The carrier has canceled more than 350 flights today, 10% of its daily schedule. That comes after the airline scrapped 30% of its flights yesterday. The disruption started on Friday when severe weather in Florida and air traffic control problems kicked off cancellations. Southwest's COO says the company needs more staff to avoid further problems. In Germany, Christian Democratic Chairman Armin Laschet is now set to leave his post by January. Laschet lost a close election last month to Social Democrat Olaf Scholz. Chancellor Angela Merkel's party is said to be searching for new leadership. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting you down to the close, there's an hour to go in the first day of trade of this week.
Yeah, and the S&P really struggling to try to hold on to gains. Doesn't look like it's going to make it.
And, you know, when you talk about struggling, you can really see that on a sector level where you get a hint of some of that defensiveness that we've been talking about, right? With technology, maybe one of the best performers, up 0.1%. Real estate, staples, that really has shown, Romaine, perhaps maybe some of the bond sensitivity and the defensiveness to this market.
No one does IMAP like you. Let's take a look at some of the individual movers, because it really is in the material space here. You're looking at Freeport Mac brand, the big copper producer, higher here by about 4%, though off at the highs of the day. Halliburton and a lot of the oil field services companies also doing well here, as you see WTI crude settling above $80 for the first time in years. Ford, which actually had been higher on the day, had actually gotten a pretty nice bid, as did most of the other automakers out there, including GM, Tesla, as well as some of the auto parts companies, despite the fact that they're actually giving some pretty stark warnings here about supply chain issues. Those supply chain issues affecting Gap here. Look, you want jeans, you want T-shirts, you want these other things. You're either not going to have the selection you want, or you're going to pay more for what you can get. But that's weighing potentially on profitability, on margins as we head into the earnings season.
Where's cotton prices at?
Yeah.
Still rallying. And meanwhile, as we warmly welcome Taylor Riggs finally back on her transatlantic trips to Europe, I thought I'd give a European flavour today, because it's interesting, this inflation concern, this impact on trading, on valuations, it's not being felt just in the United States. This is going global. And the European Central Bank Governing Council member, Klaas Knot, talking of this today, really saying, look, his worry is there's more in the inflation process that we don't understand than we do. This risky behaviour, he says, basically this trading that we're seeing, these elevated levels, the behaviour is only sustainable at low inflation and low interest rates. Now, Klaas Knot is saying, look, I'm not seeing inflation suddenly becoming other than transitory as we stand, particularly when you look at the energy prices. But if you're going to be good about your risk-taking and if you're going to have more balanced portfolio, you should take it into consideration that maybe, just maybe, interest rates could go higher in Europe. Romaine.
Yeah, let's get some more perspective here. And I'll bring into this conversation right now Ed Perks, of course, Franklin Templeton Investment Solutions Chief Investment Officer and President of Franklin Advisors. Ed, thanks for being here. I want to start off here with the inflation question. You have a lot of folks saying inflation isn't too much to be worried about. Folks over at Goldman saying, look, this will be transitory, this will pass. Other folks saying this is going to be a little bit more persistent, and maybe you need to adjust your portfolio or at least your outlook to some degree. Where do you stand?
Yeah, it certainly has been the primary question, facing investors and really markets all over the world, as you've alluded to. I think we generally, still come down on the side that we expect, many of the pressures that we are feeling to gradually rectify themselves, to subside somewhat. That said, I think this is a market where you want to be cognizant of those risks of it remaining a little bit more elevated. I think it's going to be the primary issue that investors face these next 6 months. Certainly we'll see some of the logistics issues, related to the imbalance of supply demand of goods. We'll see some of that ease itself. But look, we have some big unanswered questions. We certainly see energy prices now firmly in the equation. We see labor shortages, as was just mentioned, impacting something like Southwest Airlines. We just expect these things to be with us for some time. So while we are still in the camp of many of the pressures will ease, it's the primary risk that I think we face going forward.
What does this mean for the outlook and the growth outlook for EM versus the developed markets?
Yeah, well, certainly this has impacted many emerging markets more severely than it's affecting many developed economies, and as a result, we've seen inflationary pressures. We've seen, emerging market central banks act more quickly. I think we've seen year to date, on the order of 30, moves to hike interest rates. So, it is having a more pronounced effect on EM. We expect that to continue. In the short run, at least, and there's a lot of other things that factor into this. Obviously, the way that the COVID-19 pandemic has impacted many of those markets. It is also markets that generally, at least on the equity side, we've seen struggle a bit more than many other equity markets. So while it certainly is a dynamic at play currently. We also see, look, if we are to transition to a point where some of these fears or some of the inflationary pressures do start to come out over time, look, that's an area that you want to be very selective in, but could offer some value for investors as we look more into 2022 and beyond.
Offering some value. Talk to us, therefore, and about value versus growth, about what takes us higher. Has your allocation changed in any way when we've started to see this elevated concern about inflation, this elevated volatility, and therefore what's actually been quite a torrid move in leadership from one day to the next?
Yeah, and that's something that's been with us now for quite some time, certainly coming out of the early days of the pandemic, the tremendous leadership that growth stocks had. And then as it became clear that vaccinations would start to happen, that normalization could happen in economic activity, the strong rotation to the value sectors. And it has been a bit more, I would say, balanced, but to your point, kind of fluctuating quite regularly on a much shorter term basis. And I think that is part of the backdrop that we may just continue to face here. We do think that that growth, while coming off of kind of the peak growth rates coming out of the recession related to the pandemic, we still are expecting growth to remain relatively robust relative to the longer term trend growth rates that we see in many economies. So that also can be very supportive for many value sectors. So, growth leadership is certainly very strong in many of our economies, U.S. technology companies in particular. I think there we have a very different view, and it's largely that, earnings expectations have been relatively lofty. To date, companies have largely met those high expectations. But, I think as we Washington, but we can certainly be hopeful. I think as we look into that time period in particular, you're referencing, really this gets us out into February and March of 2022. We would really expect tapering to be, well pronounced at that point, and getting to the point where maybe some more visibility on liftoff in terms of rate hikes, while possibly not in 22, that visibility would be, certainly more pronounced in the markets. I think Washington, we just have to continue to stay on top of it. It's very difficult to predict, but in general, our view is that the policy stimulus that's been so important to helping economies recover will generally remain a pretty important part of markets.
We want to thank you, as always, Edward Perks, Chief Investment Officer, Franklin Templeton Investment Solutions, taking us around the world and across from administration issues to, of course, inflation issues. I want to have a quick look at what's happening in terms of issues of Southwest, of course, the airline having, well, a series of delays, cancellations, more than 3,000 over the course of the weekend. Now, the CEO designate, Bob Jordan, is commenting in an interview with us, saying that there's no evidence of any employee actions in terms of the disruptions. Remember, we were talking with Kriti Gupta a little bit earlier as to whether this was a quote-unquote sick out regarding some of the vaccination requirements needed at Southwest. Bob Jordan saying that Florida flights fell to near zero in some cases on October the 8th, but notably he's apologising to customers for the cancellations. Gary Carley, of course, chairman, and was previously CEO, handing over the reins to Bob Jordan. We keep an eye on the Love ticker. Meanwhile, coming up, we're keeping a close eye on the markets as well. Push towards the closing bell. Jason Valancourt's with us, co-head of global asset allocation at Putnam Investments. Plus, Mexico is among the top markets in Latin America for both stock returns and growth. So why has it been 15 months since we've seen an IPO come from Mexico? We'll take a closer look. And aluminum hits 13-year high. Everything is. Iron ore's high, gas, oil,
aluminum,
power crisis,
aluminium,
and the power crisis squeezing the supplies of energy-intensive metals. We'll get to it. This is Bloomberg.
Impact China's growth because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, part delays, chip shortages, saddled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again, and discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising. This is the countdown to the close. 46 minutes left to go at the start of this trading week here on the trading day. See the S&P 500 slightly lower on the day. It opened lower. It moved higher earlier in the session here. You saw those dip buyers come in, but that ran out of steam pretty quickly here. You got banks like Goldman Sachs and JP Morgan basically saying go in and buy this dip. The inflation concerns, that should be transitory. Other banks saying no, maybe hold off. Start to hedge some of your protection here. Seeing a little bit of embrace with regards to the Russell 2000. Weakness, strength here on the dollar spot index. And the commodity index was actually much stronger here on the day, now basically flatlining, but still being buoyed there by some of those oil prices as well as gasoline prices. You see that reflected here on the second board here with Schlumberger up almost 3% here on the day. Cliffs National Resources higher as well on the back, of course, of those iron ore prices as well as an acquisition that it made here on the day. And Facebook coming off 4 straight weekly declines, starting the week off once again here in the red here. And Cinemark Holdings, a lot of these movie theater chains were supposed to get a big bump from James Bond over the weekend, but those North American box office numbers slightly below what the analysts were actually looking for. Those shares down 6.5% here to start the week here. Of course, this is a week where the earnings season kicks off. And let's bring in Abigail Doolittle, as we always do at this time for our Options Inside segment. And anytime earnings season kicks off, Abigail, we talk about banks and a lot of the trading that we see in these bank stocks.
We do talk about banks, and more recently, not including today, we've had a little bit of a run up for sure in these banks, and on the year, an incredible run up. This, of course, as yields have been all over the map, but mainly higher at this point, even though the 10-year is off of its highs. The question is, what will loan growth, trading activity look like? But I think that you have a lot of folks on the street. I know, actually, in fact, Michael O'Rourke today, Citi last week, saying go into banks over tech, because if rates rise, that's going to help them. Let's find out more about banks going into options and what the options are saying about banks. Should they be bought into the earnings season? Kevin Kelly of Benchmark Investments, great to have you with us as always. And I was just looking, it's interesting, JP Morgan on Wednesday, and then most of the other banks I'm seeing there on Thursday. You're seeing more call buying than put buying. So that suggests that investors are, in fact, bullish on banks into earnings. Will it be the fundamental businesses, the trading, the investment banking, the loan activity, or is it just the idea that rates are going to go higher so banks will improve?
Well, I think you actually need to look what's happening in the actual banking market, and we're actually seeing banks are at their highest record of mergers and acquisitions since 2008. So banks are more confident in the space themselves. So that's lending credence to investors, especially in the options market. We saw almost 1.5 times the amount of calls versus puts heading into earnings season, right? Where we're going to get about 47% of the XLF constituents reporting this week. And I think that's pretty telling because of the stronger dollar. So when you see investors rebalancing and rotating to banks, it's because the banks benefit from a stronger dollar, where tech actually gets hurt during earnings season. So remember, earnings season is really about guidance. And so we're going to hear a lot about the macro picture, not only from banks, but also technology. So bank executives are probably going to be very upbeat and talk about more mergers and acquisitions as we go through the year, the strength of dollar, rates rising. So there's a lot of sentiment and tailwinds for the financial sector.
Are you seeing any signs that expectations could actually be too high for banks, given what you just said, the idea that tech would suffer, growth stocks would suffer if rates continue to rise, but the expectation that banks will, again, could the bar be set too high? Any signs of that in the options market in particular?
We haven't seen that in the options market. We've actually seen, when you look at the type of options that are being traded, you're actually seeing near the money calls being purchased, and so that in the front month contracts. So you're seeing a lot of activity in the deepest liquid markets where they think sentiment is going to continue going forward throughout the year end, especially if the Fed, which is widely anticipated, is going to taper in November. So you're seeing strength all the way through November, end of November and December in the XLF and in the banks.
And then rounding it out, Kevin, what about the VIX? And not just the VIX, you were just prior to this segment starting talking about the RVOL index, or realized volatility, and it is sky high.
Yeah, you've seen realized volatility almost double since September. And so what that tells you is volatility is anticipated to pick up, because I previously discussed we want to see kind of 1-2 standard deviations of VIX of 28, 36 come about, and we haven't seen the great flush out yet of the uncertainty in the markets. And so, with a realized volatility very close to spot volatility, that shows you that we could actually have some more bumps along the way throughout the next month or so.
Well, it's great to have experts like you to talk about that possible volatility and choppy action ahead. Kevin Kelly of Benchmark Investments, thanks so much, as always, for joining us for Options Insight. Taylor, back to you.
And thank you, as always, there, Abigail Doolittle. Stay with us. We're going to be returning back to more markets next. But going on over to Mexico, they're one of the top markets for Latin America returns and growth, but not the IPO market. We discuss it next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I can't support Jay Powell for renomination. So my view is he ends his term, we put somebody else in place, and I think the Fed is going to be better off, and I think our economy is going to be safer.
We have a really great story out on the terminal talking about how the global IPO market has been hot, shattering records pretty much anywhere you go globally, except for one that stands out, and this is Mexico. You basically had no IPOs from the country. Really, you talk about a strong and deep stock market and the lack thereof, that if there's no IPOs, maybe it starts to hold back some of the economic growth. Let's continue this emerging action conversation with Sherry On, the co-anchor of Bloomberg Daybreak Asia. And Sherry, we were showing that chart where relative to Brazil, which has a liquid, right, and deep structural stock market, Mexico appears to be lacking. What's going on?
Yeah, very surprising given that they do have very strong stock returns. They have a lot of growth. But when it comes to those IPOs, we're talking about a drought for the past 15 months. Especially when you have $5 billion this year raised by global IPOs and you have none in Mexico, it does stand out, right? And you mentioned those structural issues as compared to other regional rivals like Brazil, lack of liquidity, feeble retail market, not to mention that a lot of the companies are controlled by families who don't really want to go into the public markets in order to show off their wealth. 60% of Mexican listings over the past decade also trade below their IPO price. So not surprising when it comes to the capital market, you can see in that chart that as a share of GDP, they lag regional rivals behind Chile, Brazil, and Colombia as well. In fact, if anything, the market seems to be shrinking. We're talking about 5 companies trying to delist this year.
Trying to delist. All right. Well, you mentioned Brazil there. I mean, what's the real appeal there? I would think that the economy, with regards to Brazil versus Mexico, that Brazil might offer a little bit more diversity.
Yes, it's a bigger economy, it's a more diverse economy. They do have their own challenges, of course, always a political noise coming from Brazil, as opposed to, say, Mexico, where we have seen a little bit more political stability since AMLO came in. But they also have a very supportive banking ecosystem. For example, in Mexico, they have these global giants that really prefer to lend to corporations directly instead of going the higher risk path of trying to raise money through capital markets. You have more investment banks, more brokerages in Brazil, and that helps. Also, regulation, better governance is also another issue that analysts point to. One way that Mexico could help this situation would be, say, selling their stakes in those government-owned companies like Pemex. But given where President AMLO stands on these issues about state-owned corporations, it doesn't seem like that's going to be a venue for a more active capital market, which was sort of the case with what happened in Brazil and China in the past.
I think we're having an editorial call and someone was pointing out that the banks get paid twice if they manage to list these companies and then delist them as well. So I guess it's sometimes nice if you're a banker to win on both sides if you're not getting new issuance. Talk to us about currencies right now, though, because all of the headwinds we seem to be seeing at the moment is that the dollar just won't go down.
Yeah, and that's really hurting some of these emerging market currencies. For example, today, and Taylor pointed this out for me before we came on show, we have to talk about the Turkish lira because Romain will want to talk about it. We are seeing another record low. Yes?
When doesn't he want to talk about the Turkish lira?
You love Turkey.
This is all I've been talking about all morning.
So I'm appealing to my audience right now. The Turkish lira, another record low against the U.S. dollar because of U.S. dollar strength, but also, of course, remember that surprise rate cut of 100 basis points last week. Some of those currencies that have been supported in EMs have been energy exporters. So the ruble has been a favorite, the top performer this month in EMs. Also, the Colombian peso, which is the second performer this month.
Wow. All eyes on remains always favorite Turkish lira.
I'm glad. This is good.
Yeah,
Sherry Ann, always giving the people what they want.
Yeah, exactly. And emerging markets. We had quite a fun week last week, Taylor, that you missed, where we sort of just did Asia a lot of the time rather than emerging markets. But we're back on track and we're talking all things EM. She does it so well for us. Sherry Ann, co-anchor of Bloomberg Daybreak Asia and Australia. Don't miss that. Meanwhile, S&P 500, where's it at? It's had a volatile kind of a day. And indeed, talking currencies, we were looking at how, well, the dollar has been actually higher against the Japanese yen. This has been a significant move. Just the fact that the yen is now trading at the lowest since 2018, this, Taylor, is all a story of your yields. They're not open today, but the dollar yen really signifies what it's up to.
Yields been climbing. Really, the last few weeks, I was looking the highest, going back since June, I think, on a 160, now on a 10-year. As you point out, we're closed today for the holiday.
Don't make out that you weren't glued to the yields every day when you were out there in Italy and in the Cape. She was just like, what am I missing out on?
Catches our attention. A 30-year at a 216, Romaine.
This is Bloomberg.
OECD nations need to end coal use by 2030, developing nations need to follow suit by 2040, and we need coalitions of solidarity between countries that still depend heavily on coal and countries that have the financial and technical resources to support transitions, because it is essential that no more coal power plants are built.
What have we learned from this evergreen crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we've seen many events, right? Maybe in the fintech sector, and education, casino, and property. So I think diversification helps you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle, because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike. Because of the sentiment, the evergreen is hurting the sentiment, and people don't want to buy. And other developer, because they want to get cash.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. Russian President Vladimir Putin said he has a cold and that he isn't suffering from COVID-19 after he was heard coughing repeatedly during a televised meeting with officials that concerned agriculture. President Putin told his Security Council today during a later televised meeting, quote, "Don't worry, everything's fine," end quote. President Putin says he was outside in the cool air being active. The Singapore Airlines website was temporarily down over the weekend following a surge in demand for flights after the city-state announced a plan to reopen up more quarantine-free travel. Many people are looking to leave Singapore for vacations. The website is back up, but the airline says it has seen high demand and may take longer to respond to customer questions. Nearly a quarter of the critical infrastructure in the United States is at risk of being inundated by flooding. That's from a report by First Street Foundation, a nonprofit dedicated to making climate risk more visible to the public. Critical infrastructure includes airports, firehouses, police stations, and hospitals. New California legislation will force large retailers to have non-gendered toy sections starting in 2024. Proponents say the law will help consumers comparison shop and also tamp down on gender stereotypes. The new measure will not prohibit stores from having traditional boys and girls sections, but requires them to have what's called a reasonable selection of toys and items in a gender-neutral section. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting you down to the close, less than half an hour to go on this Monday trading.
Yeah, and a little bit of a shaky start to the week here, Taylor.
It is a shaky start, particularly when you look at the sectors, and it doesn't really look confident when you think about green on the screen. You have materials and energy that are in the green, some of the best performers, but then it's real estate and staples, new technology dragging everything down. So that's sort of the hint of that bond defensiveness that we get.
Yeah, and the material stocks are holding up pretty well. You take a look at U.S. Steel, Nucor, a lot of those companies really holding their ground here on this day. Dutch Brothers, of course, this was a big coffee chain that just went public. A lot of analysts now initiating coverage. 5 overweights here to start the day here. Emerson Electric, interesting deal here. Emerson Electric effectively buying Aspen Technology. This is a big move for basically the company to move into software services for the industrial companies here. Seeing a big bid here coming into Aspen Technologies, basically bringing it up to basically where the selling price would be. This is an $11 billion deal. Slight decline here for Emerson Electric as, of course, the stock and cash deal going to weigh just a little bit here, at least on the short term.
You talk about all the areas of individual micro moves happening in the stocks. Let's go back to the macro conversation we're having all at the moment throughout, whether it's inflationary pressures coming from commodities, from the labour wages as well that we saw in the jobs data on Friday. And I want to sort of go back to the fact that this is a global story. US is clearly out in front when it comes to inflationary pressures, where the market expects it to go in excess of 5% overall up until the year 2021, 2022. But we are seeing the catch-up, Canada looking pretty high. The UK, remember the Bank of England, very hawkish tones coming. The Bank of England, there we're seeing inflation push in excess of 3%. Similar in Europe, we had some of the ECB governing council members saying, look, just don't count a rate hike out. Don't be so, well, don't shine away from that when you're seeing these sorts of taking these risks in the market at the moment. Of course, the only real underwhelming area is, of course, Japan, which continues to be on the back foot when it comes to inflation. But all of this is a global story, and in large part, Taylor, it's a commodity-related story.
100%. It's not just oil, Caroline. When we talk about the commodities pushing higher, moving inflation higher, it's metals, palladium. I'll say this for Caroline, aluminium.
Oh, nice.
iron ore, all on the rise. For more, let's bring in Grant Spora, Bloomberg Intelligence analyst for metals and mining. And Grant, it is really interesting when it's palladium, aluminum, iron ore, you name it, everything is rising. What do you see as the why behind it?
So I think we saw a bit of a sell-off across all the commodities just since the beginning of July. And that was really over concerns about Chinese growth. And I think the market is now trying to grapple with, is the slowdown driven by energy shortages? And that's impinging both the demand and indeed the supply side. So there's a bit of a tussle going on in the market to ascertain whether it's going to be the supply side that's going to win out, that is going to be impacted more by energy shortages, or indeed the demand side. So I think today, and certainly over the past couple of days, as China's come back into the market, it's really been the supply side curtailments that has won out, and that's why we've seen a good strong rally or a rebound in some of these commodities.
China's growth has been in question, but also China's sort of regulatory focus has been an interesting one, particularly when it came to some of the more polluting metals, and then when it came to iron ore. I feel completely whipsawed by what's happening in iron ore. I thought it was like the laggard, not so now.
No, indeed. The question mark for iron ore is how long does this last? So we've seen some of the producers starting to bring back a bit more, or shipping a bit more tons into the market. And I think, for my view, this is a fairly short-term rebound. Certainly, what we are seeing is steel profitability in China is doing very, very well. And steel prices in the US just go from strength to strength. So there is no other places in the world that China can really draw from because it's all more expensive. So I believe that the iron ore price is a short-term rebound. But I think that just the temporary relief in the news that perhaps China isn't going to be too draconian on cuts going into the end of the year and may just ease up a little bit has given enough to see iron ore bounce up to 10% today on the Singapore exchange.
So much of this seems all linked together with regards to the various commodities that we've seen rally here. Talk a little bit more about aluminum and specifically how the energy crisis has sort of fed into the increase in prices for aluminum, and whether we can see any sort of a pullback in due time.
So that's a great question, and I think the fortunes of I'll say aluminium is really tied into how long the energy crisis or the energy tightness lasts indeed in China. So China supplies 60% of the world's aluminium, and indeed is a net exporter through its semi-fabricated products. So any increase in particularly coal prices, which are, is the sort of almost the base load of production in China, futures are up to $200 a ton just recently. That's really going to give you some cost push pressure on aluminium. And what we've been seeing is some facilities have been shuttered because power prices are just too high. So certainly over the winter period, it looks like energy is going to stay tight in China. We've seen flooding in the Shanxi province, which supplies around 30% of Chinese coal. Yeah. It looks like it's going to stay tight for certainly a good few months.
All right, Grant, great to get your insights there. Grant Spora of Bloomberg Intelligence, breaking down some of the moves that we've been seeing, of course, in the markets here. We are just about 20 minutes away from the closing bell here in the United States. Keep an eye on the equity markets, the currency markets, the commodity markets. And Taylor, how's the bond market doing today?
Very nice, Romaine. We're closed today, but we know that yields lately have been climbing. I'll keep you honest tomorrow. How about that?
All right. From New York, this is Bloomberg.
They know me as Magnus TV in Facebook since I'm streaming Axie Infinity. Axie Infinity is an NFT game where you can earn tokens, and then that tokens can be converted into pesos. I started, I'm playing almost 4 to 5 hours a day. I'm earning, I can say it's really a lot of money. It can help to sustain my family needs and also to sustain my own business that I'm starting. I'm a little bit worried about it because some people who join this Axie Infinity thinking that this is an easy money game. They can earn a lot on this game. This game can sustain their life, and I think that is not the point, or that is not really the game. We are trying now to build a community where other players or my scholars can join this esport, playing Axie Infinity for example. Even 5 years, I think.
How did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
Minutes until this market closes, and we've kind of been whipsawed again. We were higher, significantly higher really, on the Nasdaq, on the Russell 2000. We had some optimism despite the negative headlines. We had refining of the economic outlook coming from Goldman Sachs. We had worries about Evergrande over in China once again and some of the defaults. Then we start to lose the risk on tone. Nasdaq off by 0.3% now. Russell 2000 also off by 0.2%. Volumes thin, remember. We've got, of course, the all-important holiday today. We've got bond market closed. Commodities, though, had been pushing up higher. Bloomberg Commodity Index just about over 0.1%, but oil goes higher. Some of those metals push higher. The Aussie dollar reflecting that as a commodity-related FX pair. Let's have a look and talk to Jason Valancourt. He's co-head of Global Asset Allocation, Putnam Investments. As we ride towards this market close on this Monday, Jason, we've digested the jobs data back on Friday. We're now looking once again at inflationary pressures and commodity moves. Is that really what's taking your focus?
It is. I mean, I think, this debate about transitory and what exactly that means and how long that window lasts, I think is an increasingly important one. I think there are, a bunch of questions around, what had been just reopening prices, and so obviously, like we had some easing in used car prices, for example, although that reversed itself again in September. So it kind of like almost dated my piece before I hit send on it, and so but these have really transitioned to more I think important input price issues in the commodity space. You've been talking this afternoon about the fact that it's not just energy, they're metals as well. So industrial metals are kind of bumping up against some of these energy supply constraints. Obviously, metals are very energy intensive to produce. A lot of these issues have to do with carbon pricing, right? The ability to kind of switch to renewable sources of energy over a timeline with which that's reasonable. And then you combine all these things together with the fact that we don't really know with this kind of little hint and whiff that we're getting of kind of stagflation, what the Fed's reaction function is going to be with their new kind of flexible average inflation targeting regime.
Can we talk
so I
about
think all of these things are coming to a head.
Yeah, Jason, can you talk about stagflation a little bit there? When do the economics start to slow in reaction to higher prices? Is stagflation a real concern for you?
It's a loaded word. I mean, I think it means a lot of different things to a lot of different people. I think we haven't really been. If you look, for example, just in terms of surprise, if you kind of measure the readings as they're coming in relative to consensus expectations, we've had now inflation surprising pretty meaningfully on the upside and growth surprising pretty reasonably on the downside. So those are more kind of second derivative and second order effects. But I think in first order effects as well, we've started to see, for example, the Atlanta Fed's GDP nowcast, our version of nowcast, has started to roll over. So actual growth is maybe not negative yet, but certainly is starting to roll over from the healthy amount of growth that we were expecting in the summer. And so I think the stagflation is thankfully not a condition of the global economy that we have to deal with very often, but it is one that tends to be not great for asset prices, and particularly for risk asset prices.
All right, we're in conversation right now with Jason Valancourt, co-head of Global Asset Allocation for Putnam Investments. Sit tight for 1 second, Jason. He's going to stick with us as we count you down to the closing bells on this Monday afternoon here, just about 15 minutes away. And, of course, coming off of a really wild week last week where the S&P did manage to notch a slight gain here, pulling back here as we start the new week.
Volumes pulling down significantly because Taylor's back from holiday, but a bond market takes a check out, right?
It does indeed, but really catches my eye on a day like this, of course, when bond markets are closed. It is further dollar strength. We've been speaking a lot about the relentless strength that you continue to see in the dollar, and it continues next.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Extremely thankful. They don't know what to say. Again, they can't even fathom that they're out of Afghanistan. They're still in a state of shock and can't believe it.
What we have built through this process is essentially a mechanism for getting oppressed women and girls out of Afghanistan. So we're actually going to circle up and see what resources we have left, to see what options we have left, what mechanisms we have left, and actually look at potentially trying to get more women and girls out of the country as well.
We've been through a lot, us as a team. I know sleepless nights, but you know what? There's nothing more satisfying than knowing that you've saved many lives, and will continue to support these girls on their mission.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You look
drop
great.
the bow tie. Drop the bow tie.
What,
Drop
skinny
the bow
tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes,
It's a lovely
until it
thing.
becomes so fat, you just sort of...
This allows us a time to slow down the growth in the number of COVID-19 cases and give us more time to allow our healthcare facilities to be ramped up, as well as a shift towards a home recovery program.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs.
And I'm Romaine Bostic.
Check out this for a chart. Looks dramatic. But basically it's showing you that volumes are off by some 16%. So this is a great way of basically showing you how much lower your average volume is versus the last 20 days. And we're about 16% off. But it looks like a death sort of chart in some way. But basically it's saying bond market's on holiday. A few other people have taken the time off because the schools are shut.
Romaine looks unconvinced.
Yeah. I just don't know what I'm looking at. But you say that for Halloween, because that is a pretty scary looking chart there.
AVAT, average value at time, and it goes in a negative direction. So it's -5 at the top, then -10, then -15, and then it goes -16% in your average.
All right. Let's flip up the board here.
I'll get it.
There we go. All right. Yeah, now I can talk about something. This ain't looking much prettier either. They look at the XOP. It actually had been pretty high on the day here, reversing most of the gains here as we get closer to the closing bell here. A similar story for the NASDAQ Golden Dragon China Index also had been up pretty strongly on the day, a couple percentage points, now basically flat line. KBW Bank Index, which had been in the green, now reversing and deep into the red here. And similar story for the auto components makers here. A lot of people came in this morning, guys, and when they were buying that dip, but as we get closer to the closing bell, I guess it's running out of steam. Maybe it's because of that previous chart we just showed. Can we put that back up?
Yeah, I think that
there's no volume.
Let's talk to the man who indeed does have something to say, Jason Valancourt, co-head of Global Asset Allocation for Putnam Investments. And Jason, sort of go on that theme with us. We've been talking about higher inflation, some hints of stagflation, though that is a loaded word, as you mentioned. What does it mean for an allocation to your world of equities?
Yeah, so we've taken some risk off of the table as we go into the fourth quarter here. We've taken down our equity overweight, our commodities overweight. We have taken down our credit and high yield overweight as well. I think it's very likely that the low-hanging fruit and the easy money from a directional perspective and just from pure beta has been made for this year. And I think given we had this really long period where we didn't have a 5% correction, and we've had that now, and obviously, but I just don't think you talked about currencies at the bottom of the hour, and so we've seen an uptick from mid-September in currency volatility, in rates volatility, and equity market volatility, but nowhere near, I think, enough to reflect, some of these cross currents that we're seeing in the macroeconomy in through the end of the year. So I think what we've done is kind of prefer some of the more rotational and security selection ideas to rely on generating alpha as opposed to more traditional kind of tactical asset allocation.
Okay, talk us through some of them, Jason. Like, how have you been able to outperform the market? How can you take on this sort of volatility while remaining invested?
Yeah, so I think it has a lot to do with what's going on in the underlying this kind of rotation that we've seen. We don't like to talk about value versus growth. It's a little bit of a vestige of sector composition. I think it's more about just valuation as a security selection tool. And I think some of the things that we would use to measure cheapness within sector, within industry, free cash flow yield as a really good example. I think those are things that'll be even more important as we kind of close out the year. And so we were kind of looking around for just cheapness. And so I think you see that some of that in Europe, and you see some of that in Japan, and I think we're trying to do it by not taking big directional kind of beta bets and not trying to take big sector bets, but I think just relying on, obviously we've talked a lot in the last few years about the kind of struggles in quant world with valuation as a security selection tool, but it does look like that is starting to work again.
All right, we're in conversation right now with Jason Valancourt, of course, co-head of Global Asset Allocation over at Putnam Investments. He's sticking with us as we count you down to the closing bell. But as we do every day around this time, we want to jump over to the board. And Taylor, I've actually been at that board the last couple of days here. Welcome back.
Thank you, Romaine. And as a welcome back president, I certainly am going to steal one of your top calls because I also am taking a look at SoFi. It is my stock of the hour. You're up 13% on the day. Romaine, you have mentioned that it is Morgan Stanley's Betsy Gracek initiating the stock with an overweight. Really talking about a lot lot of competition coming on board, but this company has a lot to offer in terms of its robust digital offering. So this indeed is my stock of the hour. You're up about 13%. Finally, let's flip up the board, of course, here. And Jason, I'd love to bring you back in here because we've talked a lot about this, right? With rising inflation, even though we're cutting back on some of the inflation expectations, you're also cutting back on some of the growth expectations. And you said a lot of the low-hanging fruit has been made, but you're also pulling back on credit. Is there a fundamental concern with perhaps some of the slowing growth that you see that causes you to pull back on some of the overweight on credit?
I think that has to do more with the fact that, spreads have stayed extremely well behaved in this little pullback that we've had. I think traditionally the kind of yellow flag, particularly for high yield, that you might see is a big uptick in M&A volumes, a big uptick in LBO deals that are kind of debt financed. We've seen a little bit of that as we've kind of moved into the fall, kind of in the post-summer lull. I don't know that it's kind of risen to the level of kind of red flag yet, but it certainly is kind of a warning sign. And I just, obviously you look at the amount of money that's flowing into private credit. The private credit markets is now almost as big as the total high yield market in terms of par value. Investors seem to be falling over themselves to kind of give up liquidity in search of yield. And so that is a little bit worrying. And I don't know it's a disaster yet, but it's something that we're keeping a close eye on. Not a disaster yet. And I mean, there's some arguments to be made, Jason, that given the monetary policy support, and I guess to a smaller degree, fiscal policy support here, that maybe that trade isn't necessarily as dangerous as it would have been in the past here. For those folks who are looking for yield, who are looking to get to 6-7% and higher here and maintain a little bit more of a lower risk, I guess, portfolio here, how do you do that without necessarily going out on that spectrum? Yeah, it's really hard. I mean, like 6 or 7% is in the ballpark of the target that a lot of pension plans have in terms of their assumed rate of return, and in a kind of a high equity valuation world and a kind of low nominal yield world. That's the reason why you see so much money kind of chasing after the kind of low end of the credit spectrum. And so, I think there's always this debate around how long you want to kind of stay at the party until the punch bowl gets pulled away. And certainly we'll have, we expect a Fed announcement to start tapering in November. I don't think the payrolls number was nearly as bad enough to kind of throw them off that course. And it is true. You look around, central banks around the world have kind of embarked on a tightening cycle. And so I think you just need to be really cautious and kind of thinking about your exit strategy, even though it may not be in the next kind of week or month.
Jason, keeping us honest on the global element to all of this rate rise talk. Jason Vaillancourt, great to have some time with you, co-head of global asset allocation for Putnam Investments. And it looks like the market feels tapering still on track. Of course, that still is not taking the punch bowl quite away. Still having more liquidity remain.
And by the way, I'm always the first one to leave a party. I have an early bedtime.
Irish exit? Do you just slope off and never say anything?
Well, I get there early. If I show up early to your party, I'm the first one to be leaving here. All right, we're moving closer to the closing bell. I'm not going anywhere. I'm sticking around. Full market coverage right here as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs back in the saddle, counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast partners, Carol Massar and Tim Stenovic, in the same room at the same time, once again, helping to bring together our Bloomberg television, radio, and YouTube audiences. This is the time, Carol, where we break down the equity movements, but a lot of the equity movements today are tied to what we're seeing in the commodity space.
It's like we were just waiting on earnings or something, like earnings were around the corner or something. It's going to be an interesting week. We just had Randy Watts over at O'Neill Global Advisors, and he said he'd like to see the S&P break that 50-day moving average on strong volume. That would give him a little bit more confidence, at least in the market sentiment right now, Tim.
Yeah, I think that, look, what you said about earnings is certainly true. The fact, though, is investors are going to be watching very closely what bank executives say this week about the health of the U.S. consumer, and then also forward guidance, because, third quarter, that already happened. What's going to happen in this quarter, and how are they taking into account higher costs, higher costs of labor, and even looking forward beyond just this week to next week and all the companies that are reporting earnings there?
And I think it brings up a good point just about the lack of confidence, Carol, that you were mentioning about some of the guests. We just had a great guest as well, really talking about some of the consolidation as of late and sort of that lack of confidence. And maybe some of the low-hanging fruit has been made. That's certainly something that we've been hearing a lot before. And then what do you do when you start to get some of these global growth down forecast downward?
Forecast downward. The low-hanging, I went apple picking this weekend. The low-hanging fruit is never really great. It's always spotty. You really got to get your son to just jump up there, get the stuff at the top of the tree. That's where the good stuff is. All right, well, it's not really a good day here. You're looking at stocks pretty much all around, not only lower on the day, but look like they're going to close out pretty much around the lows of the day. Let's start with the S&P 500, down about 31 points, 43.60 and change, down about 0.7%. Similar story for the Dow Jones Industrial Average, down 248 points or 0.7%. The Nasdaq Composite down 93 points or 0.6%. Russell 2000 going to finish the day right around 2220 here, which is basically the low of the day, down about 0.6%. Carol,
right, and little volume, right? Low volume. We saw that down in Columbus Day.
We had a great chart on this that you missed just a minute ago, Carol.
What did it show?
It showed there was no volume.
Yeah, it was a dramatic.
It was dramatic.
And those 16% lower volumes.
It's this weird holiday, right? We're all here. The bond market's
Is it
closed.
a holiday?
Well, it is.
Right, the bond market's closed.
Kids, like
a
lot of kids not at school.
It was kind of
schools are always shut for some reason or other, I find.
It's tough on parents, Caroline.
Downgraded forecast was the word that I was trying to say. Let
Welcome
me
back,
repeat
Taylor.
myself. There we go. Let's take a look, as we always do, for the sector winners and some of the sector losers here. It's overall been a pretty red day on the screen. And indeed, Carol, you really see that. There's a lot of red even within the sector winners on days like today. This does indeed look a little bit defensive. We've been talking about the bond market being closed. Real estate, of course, technology, those are sort of those bond proxies that do well when bond yields are stable or falling. Otherwise, it is pretty red on the screen. We'll go back into the negatives. You're getting utilities, banks, telecoms. Banks here, we would highlight they're off about 1.3%. Carol, you've been mentioning, of course, pushing forward to bank earnings later this week, really to kick off perhaps maybe a read here on the consumer and the economy.
Yeah, really important, right? And it'll get us going and maybe provide some consensus among investment think, if you will. Hey, let's get to some of the gainers. Solar stocks were definitely a standout today. I'm just going to single out one, Enphase, which was the number one gainer in the S&P 500, up 4.5% in today's session. First Solar, Sonova Energy, SunPower, Sunrun also higher today. Story overnight about Ambani, their Reliance company, accelerating its push into green energy with solar deals. They bought a couple of companies. So maybe that's why. Maybe it's because of all of the energy concerns and crisis that people are looking at solar again. Checkpoint, want to mention that. Top in the NASDAQ 100, up about 1.8% in today's session. We're talking about Checkpoint Software, cybersecurity solutions company. They made a purchase. They bought Avanan, am I saying it correctly? A cloud email and collaboration security company. So investors seem to like that. Moderna, forgive me, it was up about 3% at its highs today.
Well, it stayed in the green.
Still in the green, yeah.
No apology needed.
I was a little worried about Romain's wrath if it went into the red. Listen, there's been a couple of stories, Market Watch out there, also talking about AstraZeneca, J&J, Moderna, and Pfizer are expected to bring in, listen to this, guys, $46 billion in revenue for the COVID-19 shots in 2022. A lot going on when it comes to this space. So, sorry, it did, but it was a gainer.
Yeah, it still ended in the green. One stock not in the green today. In fact, it was among the worst performers in the S&P 500 today is Southwest Airlines, ticker LUV, finishing the day down more than 4%. Still over concern about disruptions, those disruptions that we saw happen over the weekend, Friday, Saturday, Sunday, and now going into a fourth day today are continuing to weigh on the stock. The company's COO, Mike Van de Ven, said earlier today that the company is still short on workers, especially flight crews, and the company needs more staffing cushion for disruptions. 30% of flights were canceled on Sunday, 32% were delayed. That's according to FlightAware. Yeah.
And we should point out that the new CEO, the CEO designate, Bob Jordan, gave an interview with our Bloomberg reporters, basically apologizing and said that there was no evidence of any employee actions with regards to those disruptions, which of course has been a big part of the speculation here.
Sick out is what I've heard it being called. A sick out. Apparently there isn't one.
That's not happening, but still, weighing on the company's stock today, and the disruptions weighing. Comcast also still lower on the day today by 4.5%. The company saw a downgrade because of Raymond James says there's higher competition, downgraded Comcast, and also Charter to market perform from outperform. Comcast price target cut to from $65 to $60. And then also AT&T finishing the day down more than 2.7%. This time touching their lowest level since March of 2020, at least intraday. Barclays trimming its price target ahead of those third quarter earnings report.
Meanwhile, I'm going to go cross-asset. Let's have a look at the world of commodities, because really that's what's been dictating trade to a large extent, worrying about that inflationary pressure, whether we see it's transitory, as the likes of Goldman Sachs and maybe JP Morgan see it, or whether you're worried that this is a longer-term input and where that drives the Federal Reserve. We are seeing WTI crude up 1.3%, $80 at the moment. Of course, worries about the supply chain issues there, worried about the supply side issues, worried about the ongoing energy crisis, and indeed the need to use oil. Asia starting to pick up demand. High. We're seeing, or aluminum, however you'd like to say it, the likes of palladium getting a lot of play as well. This is a real area of focus as to how much inflationary push this will have. It speaks into what's happening in the FX market as well, because Aussie dollar really rallying as we see these commodity-related pairs do well, 0.5% as we see it up against the US dollar, which actually had a relatively strong day. The dollar index up 0.3%. Japanese yen, ugly, lowest since 2018. This as we basically see the rest of the world normalizing, the rest of the world seeing inflationary pressure. Bank of Japan doesn't seem to have that immediate issue. And of course, tailored to a large extent, the Japanese yen is telling us what the bond market would be telling us if it was open.
Yeah, Caroline, we've been talking about this all day. Of course, bond yields are closed today for the holiday. We'll reopen tomorrow. The long-term trend, though, and you nailed this when you were talking about commodities, has been yields higher, commodities higher, inflationary pressures higher. And at what point, I know that we're going to fold these two conversations back in with each other, Carol, does then that maybe make a price-sensitive consumer start to pull back? You see slower growth, and that is that ever-loaded word stagflation that we've been talking a lot about, with maybe some slower growth on the horizon.
Well, and we've talked a little bit about demand destruction. Do things become so expensive that, one, you put off a purchase at some point, or businesses have to think about reallocating resources to make up for those added costs, and maybe that means they don't hire or what have you, or invest in the business. But that's what's going to be, I think, one of the big questions. We know that, right? How many times do we talk about inflation, transitory or not? Yeah. That will be the big story for 2022.
There's been a lot of delayed purchases, and I mean, there was a great story, I mean, in the New York Times, too, that actually talked about some of the shadow inflation measures out there, the idea that you're paying the same price for a hotel room, but you're not necessarily getting cleaning services like you would in the past. Restaurants are offering more limited services, and that a lot of things that people are paying for, they're not necessarily getting the same level of service or of product as they would normally get. And that has a big effect psychologically as well.
Right, psychologically. Meantime, we are listening to market watchers, including one Jan Hatzius over at Goldman. He is their chief economist. And this is what he had to say when it came to the Fed raising rates.
Tapering is very likely to be announced at the next meeting. That's going to take until the middle of 2022. And then I think the question is, where is growth? Where is the labor market? Where is inflation? Under our forecast, growth is much more moderate, and inflation is on its way back down to something like 2% on core PCE. In that environment, I don't think they're going to move directly to rate hikes.
All I would say is next year's a long time off, and we shall see. That's, of course, Jan Hatzius over at Goldman Sachs. I don't know what you guys think.
I mean, okay. It's 3 months away, less than 3 months away.
And meanwhile, inflation's real right here. Look at what Gap was doing today. Romain, you're pointing it out.
Yeah, I mean,
prices, where were they at today?
Yeah, I mean, where they're holding near those record highs. And it's, look, this is a big issue here. And anyone who's been in a retail store, you see the bare shelves, whether it's clothing companies, whether it's a supermarket, dealer, car dealer lot.
Yeah, one thing we can count on is the Fed is going to be data dependent. And so as those numbers, so I've heard. All right, we've got to run. That's going to do it for this Monday edition of Beyond the Bell, our cross-platform coverage on radio, TV, and YouTube. We'll see you again. It'll be Tuesday, the Tuesday edition, same time, same place tomorrow.
More markets coverage coming up right here on Bloomberg TV. We dig into those price pressures. We're going to keep on talking about how they pop up, not just here in the US, not just on your grocery shelf, but across the world. Listen, Bloomberg.
did you think at the low point of the Greek economic debacle? What were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms, and I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Tom McKean and I might be part of the reserve fleet
might be.
that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh, my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
The mood music, it turned sour this Monday in trading. We're off by 0.7% on the S&P 500. Very few industry groups in the green. We saw materials trying to push higher, real estate, but other than that, it was down on the Nasdaq, off by 0.6%. We had been higher at the start of trade, but then we started to digest some of the warnings about economic growth, perhaps not coming in as strong in the next couple of years. Goldman Sachs citing that one, but many feeling that, look, the inflationary pressure, it is real, it is there, but it is transitory. Well, what does oil tell you at the moment? Up 1.4%. We are all eyes trained on what's happening with the metal prices as well. Palladium, aluminium, copper, all on the rise as well. This is iron ore, even up 50% in the last 3 weeks alone. The inflationary pressure is real. This is really what is sort of taking the wind out of the sails of some sort of bulls out there at the moment. But valuation still a bit keeping an eye on. Remember, the bond market was shut today as we had a holiday. But we have one key area that is continuing to be under pressure, and this is, again, a supply chain issue, a supply shortage of labour, of people to get in your plane and help attend to you and indeed fly it. Off by 4% is Southwest Air, as they had to cancel more than 3,000 flights over the course of the weekend. The CEO-elect coming on to Bloomberg, talking to our print colleagues, saying, we apologise, but for now, they're not out of the woods. Taylor.
Unbelievable. Caroline, this really ties into a theme of where we are in terms of this inflationary trend. And you talk about a week of wild price spikes. Well, lowflation may have been interrupted, but it's certainly, is it over yet? I don't know. Policymakers and investors alike are all arriving at this conclusion as prices accelerate across the world. Here to break it down with us, Bloomberg's political economy editor, Ben Holland. And Ben, I kind of want you to square with us maybe first the definition of transitory, because some are saying that, well, prices are going up, but then eventually they'll level off and it just won't increase at the same rate. And so that means it's transitory because it doesn't increase at the same rate, but it's not going to come back down to the prices the way they were a few months ago. Is that how we're supposed to be thinking about transitory?
Well, you're certainly right about the prices not coming back down, but I think you put your finger on something that was a problem with the whole transitory concept from the start, which is that nobody knows how long transitory is and what it really means. I mean, if you look at things take the long enough view, then pretty much everything is transitory, right? So what we're seeing now, and another problem with the transitory argument is that to a lot of people, I think it sounds like no big deal. If you say something is transitory, then it sort of means no big deal. But in fact, of course, if you have high prices for a couple of years, even if it comes back, even if inflation slows down after that, then if your incomes aren't keeping up with the prices during that time, you're going to suffer.
A big part of, though, when you talk about whether this is transitory or not, you have to factor in the labor component here. And it's not just overall aggregate wages going up here. It's the fact that a lot of the issues that seem to have led to other inflationary pressures, the price that we're paying for natural resources, the prices that we're paying for shipping, all of these things feed back into wage issues. And those wage issues aren't going to go back down, assuming some of the other issues do go back down.
Yeah, the wage issues are not going to go back down. I guess the fear has been, will they keep going up at an elevated rate? Because that gets you into the 1970s scenario that people talk about, the wage price spiral, where prices go up and then wages have to go up to keep up with the prices. And then companies, because they're having to pay bigger wage bills, then start having to put their prices up, and the whole thing kind of escalates. I think the consensus still is that that's unlikely to happen in the way that it did in the 1970s, partly because, while Labour has a certain amount of bargaining power right now, it may not have in the longer run the bargaining power that it used to when Labour unions were much stronger and more widespread in the United States than they are now.
Where are you seeing some of the most extraordinary sort of anecdotal evidence of all of this, and what helps paint you, as you said, in the longer term, everything's transitory, but we were just talking offline about you walk past a car dealership, you are expecting a delivery, a sofa, a bed, all of us are living and breathing it. Where are you hearing some of the most extraordinary stories from an anecdotal evidence?
I think the American used car market is, of course, a great example. I mean, up close to 50% year on year. I think what you saw in European energy markets last week, even though they did come back down again, is an example of some of these pressures where you had, crazy situations where natural gas prices were up, 20, 30, 40% in a matter of hours. And then I think if you just look at the list of commodities that are at record highs or the highest in more than a decade, it could be oats for breakfast cereal, it could be iron ore that you mentioned a while ago. There's just such a long list of them, and they feed into so many other prices in the economy that I think that's one of the most striking things, the breadth of this.
There seems to be a longer and longer list of central bankers starting to talk about this, from Europe to the UK to here in the US. Ben Holland, thank you so much. It's a really great global take. Go and read it on Bloomberg and on Bloomberg.com. Meanwhile, First Word News, here's Mark Crumpton.
Caroline, thank you very much. President Biden's chief medical advisor says coronavirus infections in the United States are still too high for a return to normal. Dr. Anthony Fauci told CNN it's important not to declare victory too early. Average daily infections have fallen to about 95,000 from more than 150,000 a day just last month. The pandemic-delayed Boston Marathon returned today after a 30-month absence due to the pandemic. It was a race with fewer runners and with social distancing, although organizers put runners through COVID protocols and asked spectators to keep their distance. There were still sizable crowds in some spots. The Grand Marshal duties were shared with hospital employees who have worked during the pandemic. Kenyans won both the men's and women's races. China has expanded its booster shot effort to more parts of the country, including central provinces and 2 southern regions. Local authorities say people aged 18 to 59 who received their second shot more than 6 months ago are eligible for a booster. China has vaccinated almost 80% of its population. 3 U.S.-based academics won the 2021 Nobel Prize for Economics for work using experiments that draw on real-life situations to revolutionize empirical research. David Card at the University of California, Berkeley, Joshua Angrist of the Massachusetts Institute of Technology, and Guido Imbens at Stanford University will share the prize.
I was just absolutely stunned then to get a telephone call, and then I was just absolutely thrilled to hear the news. In particular, kind of hearing that I got to share this with Josh Angrist and David Card, who are both very good friends of mine.
The Royal Swedish Academy of Sciences said the 3 academics have, quote, completely reshaped empirical work in the economic sciences. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Natanggap ko po ang inyong nominasyon sa akin bilang kandidato sa pagkapangulo ng Republika ng Pilipinas. I am a fighter, and I will always be a fighter inside and outside the ring.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
We are getting a lot of bank earnings starting to come out this week. JP Morgan hits us first on Wednesday, and so far it is set to be one of the best years versus the S&P since 2000. Investors are also looking at potential comeback for loan growth. This is after it was largely out of reach during the pandemic. We're joined now by Bloomberg's Sally Bakewell. And Sally, give us a preview, and JP Morgan, of course, the first, so it can really give us an idea and set the tone. Is the focus loan growth? Can people, now that the stimulus checks have faded, start to take out loans again?
Yeah, I mean, so JP Morgan is tomorrow, is on Wednesday, sorry, and we did have Jamie Dimon, its CEO, speaking at a conference today where he said that the consumer is in extraordinary strength and is in great shape, and they're expecting to see loan growth pick up. So I think all focus is going to be on that, and we have had analysts saying that they expect some sort of an inflection point because, of course, loan growth remained elusive even in the last quarter because people weren't using banks to take out loans. They were using their stimulus checks instead. So we're expecting JP Morgan and Citi to lead the charge here, perhaps seeing their total loans up by about 5% each. But the picture's wildly varied, with Wells Fargo and Bank of America expecting to see a drop. So there still remain pressures from resurgent Delta variants and, of course, from labor shortages and supply chain shortages. But the expectation is that we might see a bit of a pickup.
That's on the consumer side to a large extent. How much are we just all independent on the investment banking side? We're getting volatility at last. That's got to be a good thing, right?
Yeah, so we are expecting trading revenue, of course, because of the wild swings in the markets during the pandemic. They saw wild profits because of that. Those moderated last quarter, and we're expecting that to happen again. But they will again probably be offset by a deal-making surge. Deals are at a five-year high, and Goldman Sachs and Citi are expected to do particularly well here. So any kind of slackening in trading revenue is expected to be picked up by a big boom in deal making.
What about staffing levels here? Are we going to get a little bit more insight, not only to the levels of staffing, but of course what they're paying a lot of these folks? There's been obviously a lot of talk about them offering a lot more incentives to new hires, and I guess maybe potentially paying the current employees a little bit more.
Yeah, we are expecting expenses to rise, so that could be one of the reasons, as is tech investments. You know, they've got to compete a lot with technology firms, so they've boosted investments there. But we'll be looking
These
out
are the
for
robots
that.
we're talking about?
Yes, the robots indeed. But we will be looking out for that, along with things they've been particularly silent on. For example, the Texas crackdown on abortion, gun laws there. Will they make comments about the fact that some of their business is ground to a halt because they can't do municipal bond underwriting because the government has said that.
It's almost like she's calling their name.
Yeah. Muni bonds, they're always a part of even bank earnings, you guys. You heard it here first.
Exactly.
Sally, fold us into this with some of the comments like today, of course, with chief economists of some of these banks downgrading global growth expectations and U.S. expectations in particular. Are you expected to get commentary about slowing growth next year, or is that a lot offset?
I think, again, pointing to Diamond's comments today, and he said he didn't like to give forecasts, but he doesn't see the issues that we're experiencing now to be issues in 2022. So I think he thinks the economy is going to be on good footing next year.
We want to also just dovetail. We're talking crypto in a little bit. Jamie Dimon, still not a big believer in Bitcoin?
No, I mean, he wasn't. He's called
Well
it.
done,
He said it was fraud in the past, but then he also said
he's dialed that back.
He dialed that back.
Yeah.
Today he said Bitcoin was worthless. Or he believes.
But that's an improvement, right?
Yes, it's an
gone
improvement.
from fraud to worthless.
That's his personal opinion, he also said.
Yeah, so it's investable.
Yeah, and I think he also... Yes, and I think for him it's all about what the clients want. So they are doing what the clients are demanding, and that's what he said today. He expects it to be well regulated, he also added.
And they want to be, of course, still in a middleman within all of that when, of course, crypto is trying to not make them a middleman.
And Sally Bigwell, A+ for dealing with us on this program. As she
Are we giving out letter grades now on this program?
Yeah, she gets A+ for mentioning munis.
Munis,
dealing with your worthless Bitcoin.
I thought we would grade this like the CFA. We would just make it as opaque as possible.
Everyone fail. Everyone fail apart from 20%.
D+ is passing in our world, so Sally nails it.
You were in the 90th percentile.
Thank you. As always, let's get a check on Rameen's favorite segment after
Business
crypto.
flash headlines.
Are you talking
We're not teasing what you missed?
Business flash headlines.
Bitcoin again.
Crypto. Look at that for a transition.
Caroline's hacked into...
It has climbed above 57,000 for the first time since May. In the past rallies, there are a number of reasons that have been cited. Among them, easing of those concerns about regulatory efforts in the U.S. and China. There's also optimism that U.S. regulators will approve a Bitcoin exchange-traded fund. And in the U.S., Merck is seeking emergency use authorization for a pill to treat coronavirus that brings the drug molnupiravir closer to becoming the first oral antiviral treatment for the disease. A study found that it cut the risk of hospitalization by about half. Merck makes the pill with its partner, Ridgeback Biotherapeutics. And of course, Romaine, we pushed forward to what you missed. A big story coming up, right? About
we had to get to those business flash headlines before we can get to this. But we got the big take today on the Bloomberg Terminal is all about the life of a trader. What do you think the life of a trader is like? What do you think it was like prior to the pandemic? What do you think it was like during the pandemic? What do you think it's like now?
Joyful. At all times.
Joyful? Have you ever met a trader? They're always
exactly.
grumpy.
I would have thought it'd be really nice, relaxing, taking time out.
The distressed credit one has got to be my favorite.
What you miss is coming up next. That's a tease. Look at that. We didn't even tease our guests here. Katie Kaminsky, Lee Drogan. Don't go anywhere. This is Bloomberg. A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From Bloomberg's World Headquarters in New York, I'm Caroline Hyde.
I'm Romaine Bostic.
I'm Taylor Riggs.
All right, and we got the start of the week. Taylor, you're back. Equities, well, they're in the red. A big debate right now heating up about whether inflation pressures are going to be transitory or not. Of course, it's one of the big issues that traders are going to have to watch, of course, into the last quarter of this year, maybe even beyond if it's not transitory. In a new issue of Bloomberg Markets, our reporters, they actually followed the day in the life of 5 traders out there to see how they are handling this environment. It's a pretty wide-ranging group of folks, Caroline. It covered all various assets, including, yes, crypto. We'll get to that, don't worry. Quants and credit.
Yeah, and we can take a listen to actually some of the traders that were really focused in on what they had to say about the current environment.
Taking emotion out of it completely, staying educated, very, very important, staying disciplined, right, and staying patient, especially in an environment like this where we have volatility, like unbelievable intraday.
There's a psychology around understanding what's out there, not fighting the market, and being respectful of the market and what the market's telling you, and being really cynical about every input that's in your mind and questioning every assumption, which can be tiring sometimes. But you have to do it.
I think it takes discipline and sort of ability to disentangle, and I know that sounds weird, but sort of disentangle the decision-making process from the day-to-day.
I think having that early sort of insane volatility of crypto has, helped me manage volatility and understand that I could always be off by an order of magnitude, and so to plan for that.
Well, you take all crypto, all tokenization, all DeFi, everything related has gone to $2 trillion. So everything that we do day to day that people don't even realize yet, that market's telling you is going to be disrupted.
There's an opportunity when there's lots of excess volume, and we've seen that with a lot of these meme stocks. The retail engagement, by the way, the retail engagement from my perspective is unbelievably good for us. All right? I am a big fan of growing our ecosystem.
Nice little roundup there. Now let's talk to one of the reporters who's behind that key story, Bloomberg Wall Street correspondent Shonali Basak, driving force there. And Shonali, I'm interested in, there are all these different types and forms of trading, all these different assets being looked at by these 5 individuals. But were there a few key narratives that you sort of thought throughout, whoever it was you spoke to?
And definitely. We spoke to people with $30 million in assets from $330 billion in assets. And something a lot of them had in common were a few things. One is the comfort with volatility and humbleness to know when you're about to lose money and how to deal with it. So a lot of these folks we spoke to about what happens when they lost, as well as what happened when they won. The other big thing was technology, because whether they were talking about crypto, DeFi, or just what they call ATSs, alternative trading systems, the adapting to new ways of trading was something that they also had to be comfortable with. And then also a lot of them started very, very young, right? So from the 20-year-old crypto trader to even the co-head of Apollo's credit business, remembered being given a lot of responsibility early on. So remembering how much young people have to do with this market is important.
Well, talk a little bit more about the adaptability, and you mentioned sort of the idea that the trading platforms have changed. Sometimes the person you're trading with isn't actually a person, and I'm sure that they have to kind of factor that into how they want to price things, or more importantly, what they bid or what they ask, right?
Yeah, the liquidity in the market is a really important thing, and also factor that into the volatility itself. So one thing Apollo made the point to me was don't trade just to trade. They said, you need to know everything you can about the asset and know, as just as importantly, what you don't know about the asset and the counterparty. They voiced some concerns about, for example, portfolio trading. So the more algorithmic trading behind bonds when you come to the big banks that are looping these asset classes together. Yes, you should be worried about this to some degree. But the other thing about technology is interesting is that, Apollo didn't say they would get into crypto full scale, but they've been investing a lot in blockchain and potentially DeFi in terms of, being the counterparty to somebody else through these technologies. So again, you still need to know who you're trading with, but the method in which to get there is what's changing.
Really interesting. Thank you as always there to our own Shonali Basak. Let's bring in one of those traders profiled in that piece. Katie Kaminsky, Alpha Simplex Chief Research Strategist and Portfolio Manager, who has about $6.5 billion in assets under management. And Katie, a great profile to read, namely, of course, because it is all about the quant in your instance. And I am curious, just to kick us off, start with the way quant trading has really changed for you. We knew of the blue ups in 2008 of the industry, the refocus, and then, of course, the pandemic that upends the industry again. What have you noticed is the biggest shift about the quant industry?
Well, I think the most exciting part is that quant is a spectrum, and these days everything is influenced by quant. And so it used to be very much a niche part of our business, but after what we've seen in technology and all of the sort of data science, really its growth, it's really that quant is pretty much in everything that we do in finance. And so I think for me, who loves quant, that's a good and exciting change in that it's part of everything we do because it's about data.
Data, it's about infrastructure as well. And as we speak to you, sat at home, it looks presumably to a certain extent, how much has that been stress tested this time?
I think it's been a great example of how technology can really revolutionize business. And I think for us who had been sort of more your classic tried and true quants, it was a learning experience that we could go from being used to the classic style of trading to actually doing things remote and learning how to use new technologies and new methods to navigate a very different work environment that we didn't expect prior to this.
Talk a little bit, Katie, here about some of the modeling that you guys do. I mean, we talk about, the quant trader is such a fixture now, but I mean, you go back 20 years ago, I mean, they were sort of shunned, and we all, of course, remember the great memoir by Emmanuel Derman talking about his experiences in the early days of being a quant trader and a quant strategist here. There's always been the concern here that once you model something that's good, everyone else is going to either duplicate your model or find some way to replicate the more profitable portions of it. And then, of course, that means that down the road, the profitable portions of it become less and less.
That's a good point. But I think one of the key things that we think about in the quant strategies that I work with, which is particularly trend following and some of your tried and true methods, for me, it's really about measuring data and aggregating information together in a way that we can actually distill views on the market. And I think that one of the challenges today is that so much information is out there. So the way that you aggregate and measure information and use that to trade is still somewhat of an art in the sense that there's so much out there that you can use. And so I do agree that sort of some very classic tried and true complex, really complicated strategies, yes, they will get arbed away and the secret sauces of the past no longer work. But some of the tried and true methodologies, things like trend following, still provide an interesting approach to trading the markets where we're not focused on emotion, we're focused on measurement. And that just provides a very different return series than what you might have with other investment strategies.
Does that still work, though, given the heavy hand of a Federal Reserve, where the models might tell you companies go bust and the Fed comes in and starts buying junk bonds? I mean, truly, how do you take into account a heavy hand of a Federal Reserve that dampens volatilities? Can the model see that?
That is one of my favorite questions because everyone says, well, now the Fed's going to come in and control the markets and there'll be no more trends. And every time there's a trend, that's going to reverse. In fact, how I answer that is that when the Fed comes in and changes market dynamics, it creates very different trends of which we follow in just a very different sequence than what you might think about. So if I look at a year like 2019, that was a phenomenal year in fixed income. And I look at 2020, some of the bigger trends were energies. There were also fixed income again. So I think anytime you have a different market environment and a stressor, you find different trends that occur in the wake of that type of behavior. Yes, classic trends of the past stop working, but it just creates a new environment. And right now, inflation has been our biggest trend that we've been following.
And boy, haven't we been talking about it. It's great in your piece. You talk about your early days and, of course, always loving maths. The PhD was really, it was your Professor Andrew Lowe, who got you into systematic trading and an understanding and sort of getting your appetite about that. Does your day to day now look like how you envisaged it to look, Katie? Can you walk us through how it feels, what it is like on an average day for you as a trader?
Oh, that's a good question. I mean, I think why I was interested in what I do today is I was always fascinated by this idea of disentangling emotion from decision. And this idea that there's these periods of time where rules and methods for determining what you should do might actually work better than what your gut might tell you. And so I was really fascinated with this as a PhD student and was interested in what are the rules that traders use and why do they work and when do they work? And as I sit today as a quantitative investor, I live that day to day, and that these rules and these strategies, they make the decisions. I personally disentangle my gut feelings of being upset if they don't work, and also how the market moves. So it's kind of a fascinating field in that sense.
Great to get some time with you today. Katie Kaminski, Chief Research Strategist at Portfolio Manager Alpha Simplex. You were going to add something, Romain?
Well, I was going to add to this that do you know that she wrote a big portion of the CFA material on managed futures?
I did not know that.
I just noticed her name on there. I guess we could have asked her about it.
Do we need to blame her for?
She can help me study.
Yeah, exactly. She can write a few questions for you.
No. I think she's
never going to advocate bending the rules here. Coming up, we can dig into the world of crypto. How traders are handling all the volatility in the space. Do they teach this in the CFA yet?
When are you giving me your notes, Taylor?
You know, I could share you my notes.
Thank you.
What are you going to give her in return?
Nutella.
She's got a lifetime supply. She's just come back from Italy. She doesn't need Romain's Nutella. Meanwhile, we're talking with Lee Drogan in a minute about the new firm tied to digital assets. Let's see if there's notes from Taylor on that. There's a Bloomberg.
There was something wrong with her eye. And when I had a look, it looked like she was blind. The vet that she's registered with were only doing telephone appointments, which was a bit pointless because she really needed to be seen by someone. And I couldn't get one anyway for like another week. I was just quite worried about, the complications of leaving it for so long.
We've seen millions more animals becoming pets in the past year due to the people having increased time at home. What we're also finding is due to Brexit that we're having decreased numbers of European vets working over here. So unfortunately, we're unable to meet that current demand for pet services. Also, COVID's got the inevitable impact with people having to self-isolate.
It is very limited what we can diagnose, so it's more about peace of mind and determining whether they do need to be seen in person.
think that Bitcoin is worthless. But I don't want to be a spokesperson. I don't care. It makes no difference to me. Our clients are adults. They disagree. That's what makes markets. So if they want to have access to buy or sell Bitcoin, it's hard. We can't custody it, but we can give them legitimate, as clean as possible access.
All right, that was JP Morgan CEO Jamie Dimon, of course, speaking earlier. This was at the Institute of International Finance meeting. And of course, look, we got to talk crypto, because Caroline's here. And it's one of the big areas of today's Bloomberg Big Take, which, of course, focuses on the day in the life of traders. And, of course, it focuses on volatility and a few other things out there.
It is a good day when we can mention the VIX, the MOVE Index, the FX Volatility Index, and then, of course, Bitcoin volatility. And that is, of course, the price at the top, 57,000. I think we said that was the highest going back since, you can see there, March, April, May. Then the bottom, the blue screen, really is the 30-day volatility. And it has been creeping up, really, since the lows of September. All of this really brings to mind, well, is it a blessing or a curse? Given the volatility should be good for markets. That's what makes markets. Let's discuss it all next with Lee Drogan, of course, who started a new firm recently. It's Starkiller Capital, investment management firm applying quant research now to digital assets. And Lee, this is interesting because we know you as someone who traditionally would come on. We talked to you about equity and traditional equity analysis. Make the pivot then and the jump for us, how you apply that with crypto?
Yeah, I've been a crypto investor since 13, more so since 15. But I guess more interestingly, in early 17, sat down to apply very similar models to what your previous guest uses on the equity side, which is what my original kind of beginning of my career was in, equity stat arb, to the crypto market, specifically those trend following models. And what we found was that because of the kind of asymmetric nature of the growth of these cryptocurrencies, these trend following models are just incredibly useful in this market. And so at Starkiller, we are leveraging those very classic CTA style trend following and time series momentum models, and they work very well.
If people are going to be base about this, they might say, well, of course, trend following matters because there's no fundamentals. So you have to look at the technical element of trading these assets. But how do you think that that's going to remain true? How much harder will perhaps the institutional money flooding in make it for you? You must be slightly ahead of the curve. Are others coming?
So I would completely agree. And my original thesis around crypto, specifically in 15, was that it was a utility-less, basically financial asset as religious proselytization. And really, for me, only in 2019 did we really start to see some fundamental value to any of this stuff. And yes, it is definitely coming. So there will be more rel-val-esque, stat RB trading, and that will cut down on some of the momentum in the market. But it still stands that because of the global nature of the asset class, and because we're just still so early in this asset class, that the asymmetric nature of the returns, when something does get going and does kind of hit escape velocity from a fundamental perspective, you don't want to cut off the right tail of those returns, and that's where those trend following models will continue to be incredibly useful.
With regards to mitigating risk, though, Lee, I mean, I'm just going to go back and look at it from an equity perspective. When you talk about looking at market risk and, kind of trying to match up your investments in your portfolio, with whatever beta you want to set it at here, how do you do that in the crypto sphere here, particularly when correlation